Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, oh man, I didn't get the music ready. Hold on a second. I feel like I'm always a little bit late these days. I need to fix that. So going over to the charts real quick. I'll do that while we're waiting for the music here. Oh, there it is right there. Treasury volatility is just like completely died out. Isn't that interesting how quickly that happened? It's just like, I mean, there was a little bit yesterday, but ultimately we didn't really go that far. Meanwhile, the S&P 500 is just game on, man. As the treasury volatility has come out, the equity markets have just been loving it. Oil had a little bit of a fall yesterday. Natural gas still on the downturn. Gold and silver holding this range, which is quite impressive. Oh wow, a good breakout in silver even. Okay, copper kind of sideways. And then we got to come back over here. Bitcoin's still holding some of these highs. A little bit of some drama up and down here. I'd say it's still fairly constrained. I mean, there's been some bullish action in here, and I kind of feel like it's a little bit of BS. But at the same time, I also kind of feel like normally they would keep going, and they're not there yet. And then here's the dollar. The dollar a little bit lower at 101.76. So in a moment, we are going to get some important numbers. We're going to get GDP and initial jobless claims. Okay, so the U.S. GDP quarter over quarter final estimate is 2.7, just really good. Okay, and that's what it was before. So they're expecting no revision to it. And then initial jobless claims, we're expecting 196 versus the previous reading of 191. So I think that we could get some more activity here in the treasuries, but I'm concerned that they may be waiting for the PCE that gets released tomorrow. Right. So let's just be aware of that. You know, we got some okay moves yesterday, but they were so constrained compared to like what's been going on. So that's where we're at. We got about a minute here. According to Reuters, almost all the remaining shortfall in U.S. labor force participation is the result of demographic and other trends that predate the COVID pandemic. Interesting. Okay, so it's 2.6, slightly lower than forecast, and jobless claims slightly higher than forecast, 198 versus 196. So I don't really see the market reacting to that, but I'd say that is good. I'm gonna buy on Sim here. Oh wow, okay. Okay. PCE, core PCE 4.4 versus 4.3. They might be reacting more to that than the jobs numbers and the GDP. Yeah, don't like it. I'm going to take the quick loss here. I don't know. What I'm seeing so far is not too encouraging. Like, I'm concerned that we're going to get... Oh, now it's going my way. I'm concerned that we're just not going to get a whole lot of activity today and that they're waiting on PCE tomorrow. Because the movement that we've had here has kind of been BS. Oh, Treasury Secretary Yellen is speaking at the moment. See, it's moving, but there's really not a ton of volume coming through it. It's quite sporadic. Let's check some of the things here. The quarter end here tomorrow is going to be nuts, I think. Wow, 2 Army black helicopters crash in Kentucky. That's a little weird. It does kind of look like they want to go to the downside. Go trade forex? No, we keep track of currency movements though. If you look here down towards the bottom of the screen, just to the right of my picture, you can see my synthetic dollar index that I am calculating from the FX futures on the CME exchange. Looks like the dollar's moving lower here though. I mean, they were already moving lower, and now they're about 5 cents lower relative since the news. What news? We just got the GDP numbers. It was 2.6 versus 2.7. Also PCE and jobless claims. I'm not 100% sure which of those is actually moving it the most, but there's definitely a pretty strong move to the downside going on in the dollar, and it seems to be dragging the treasuries with it. I'm not seeing the movement in the Japanese yen. I'm seeing it in the euro. Oh, British pound is kind of doing some wild stuff. Swissie's doing some wild stuff. But Japanese yen is not. That's really curious. So treasuries tend to have a lot of correlation with the Japanese yen. So I wasn't just doing that just because somebody that came in asked about Forex, but it seems to be there's an odd correlation going on here. Thanks for your. Oh, you watched if you watched that whole series, then good for you. I'm really proud of that series. But what happens is a lot of time people find those other videos and they come in stream and then I tell them to go and watch those videos. So that's funny. Man, they are just slamming this. I'm not sure makes sense to me how you get higher rates out of all of this, but it's definitely going a certain direction, ain't it? Well, so how much net selling has it been now? Only 2,000 net contracts. That's... If we're generous and we go back to before the news, we could say that it's 4,000 net contracts. That's a little unusual. Anastefa, how are you doing? Oh, you did your exam? Good. Wait, which exam was it that you did? It was just school, wasn't it? I do remember you talking about something like that the other day. Saying that you should be studying instead of trading. It's not letting up. I can't see myself participating in this. This one, oh, modeling and computer science school. Nah, I don't think so. Okay, so there has been 10,000 traded at 09.5. And we are starting to get a little bit more in delta selling. But like the thing is, it's not even like, so sometimes it could be like, okay, they're not really selling in the 10-year, but then I go and I look at the 5-year and they're really selling. But I'm not even seeing that. So even though we've gotten a pretty decent move down, I really cannot participate. It just doesn't, the flows and everything just are not lining up correctly. And nor do I understand why it's moving the way that it is. I'm not sure I see. Let's come back to Zero Hedge here real quick. Well, the latest story from Zero Hedge is, despite declining inflation prints in Spain, Italy, and Germany, short and bond yields are rising this morning. The slowing inflation prints, of course, are helped by the base effects of the collapse in energy prices is helping, but as is clear from the data below, there is more stickiness to overall inflation than hoped. Spanish CPI plummeted as energy costs retreated. March's headline reading came in at 3.1% year over year, down from February's 6% year over year and much lower than 3.7% year over year expected. However, core CPI, excluding volatile items like fuel and fresh produce, only dipped a smidge to 7.5. Italy's domestic producer prices fell 1.3%, with year-over-year PPI showing 10% from 11.6. The German CPI eased in the preliminary March data, with the headline print down 7.8% year-over-year. However, the 7.8 print was considerably hotter than expected. Considerably hotter than the expected 7.5, and is the second month in a row hotter than expected inflation for Europe's largest economy. Notably, Bloomberg notes reports that wages are a key factor that officials are monitoring for signs that price growth is becoming entrenched. Talks with workers in Germany's public sector who want a double-digit pay raise ended without a deal overnight and will go to independent arbitration. Interestingly, ECB rate hike expectations have risen intraday as this inflation data hit. How the country level figures feed through to the 20-nation Eurozone will be revealed Friday, with analysts expecting the main measure of inflation to slow 7.1%, even as the core gauge ticks up to a record 7.5%, and none of today's data helps to adjust that core print expectation lower. So is it that they are selling the European bonds, they are buying the euro in expectation of tighter monetary policy in Europe compared to the United States, and they were just kind of waiting for that news to be over before they made this further move here? That kind of seems like what it is to me. How are you today? Well, I feel a little bit better now that I have a reasonable explanation for what's going on. It will be irrelevant to the topic, but while Seth was watching Jigsaw's videos, or the one suggested there was a video, I saw it there and just started watching it. I'm glad. Oh, is that how you found my channel? Is that what you're saying? The whole YouTube thing is, you don't realize, like, a silly algorithm that based on how many people click on a thumbnail and how much of the video they watch has made a significant, I would say a fairly significant change in the relationships with your life, right? Like, you put a lot of emotional energy into trading. I mean, we don't want to be emotional, obviously, but it happens, right? And And you really, if you're going to do this, you have to be hardcore about it, right? So it's a lot, and it's not normal to do that all on your own, right? You need to have like support groups and other people that are collaborating with you and doing it with you, and that's what this channel has been. So you coming in here and watching this 2 hours a day and chatting with us, I think that that's like a fairly significant relationship in your life. I mean, I think that the world would probably try and trivialize it and say it's just the internet, but to me, it's a really significant part of my life, you know, and it's all based on a silly algorithm. I think emotions help you in trading. They can, I guess. I mean, like, your brain is a neural network, and your emotions are one of the inputs into that neural network. That's true. Well, there was a lot of volume traded at 09.5, and then there was a little bit slip lower, and then a lot traded at 07.5. So they may develop a range here. Yeah, I wish this is one of those situations where I wish that I had Euro data. So do any of you guys get the Euro bonds? Are you seeing significant selling flows over in the Euro bonds? Can you take a look? They have kind of paused at 08, so there's an uptick at 08.5. This is a very, very, very interesting action. So here's the other question, though, is if it is the European bonds pushing us, does it have legs? Well, when I come over to like a daily, like my volume profile charts, I guess you could say, yeah, there could be plenty of, because we're still quite above where we were before Powell, right? Oh man, so there was this study yesterday showing that children growing up with dogs and cats are less likely to develop food allergies later in life. And I'm just seeing this study everywhere. Okay, it looks like they are recovering a bit here. I'm not really seeing a shift in the dollar, though. How much did that end up being? So we went from negative 110 to negative 117. So it was about 8,000 contracts short. I mean, that for as big of a move as that was, to go from 15 to 07, so basically 14, 15 ticks, baby. That's a really big move to happen only on 8,000 contracts, man. I guess the market is a little bit less liquid than it was yesterday, only slightly. But there was a lot more 1200s yesterday. I guess there's 1200s if you look below us. It is still kind of giving me these signs that like the treasury market seems a little bit range bound. We might be able to go for a higher rate though if this comes back. So I'm seeing this person on Twitter saying, question to the financial twit guys producing good quality content. How do you handle plagiarism? I see quite a few guys jumping on the bandwagon of a decent macro take of mine and sometimes not even taking the piss at changing a few words just to make it look like they didn't control C/V. Well, I find so often that I'll make a take here on the stream and then later in the day it seems like everybody in finance is taking the same take, you know? So I think that in the news, that is just kind of part of the game. And maybe, I mean, if people are outright plagiarizing you, then that's bad and I don't know what to do about it. But I think that you just kind of have to assume that a lot of people will be having similar opinions to your own. Right? But there's more than just the particular position that you're taking that you can be using to differentiate yourself, right? Okay, so they are back to 09.5. So there was kind of a node here originally at 09.5. So it doesn't surprise me that they came back. And that is still point of control as well. So that's interesting. Well, I would say that the liquidity conditions here, well, oh wow, somebody just ate back at 10. That was quite aggressive. Jose, how are you? Okay. So I kind of wonder on the inflation front, right? So like if our next set of inflation numbers are bad, how much do you have to discount whatever numbers you get because of the SVB collapse? Is the SVB collapse really tighten money that much? Is it really that big of a deal or not? Because I mean the equity market seemed to be recovering really well this week and looking past it now. And then you look at Europe and Europe, it's like, well, Europe, they're no question that over there they're going to continue to be strong against inflation. So you wouldn't want to discount what's going on in Europe as much, right? So that would explain why European treasuries are pushing. But then at the same time, I really don't see the Federal Reserve like reducing rates when the European Central Bank is raising them. You know what I mean? Because that will just destroy your currency, right? Don't want that. So that seems like kind of a conundrum because those two things are kind of going opposite ways. The US Treasury market has been saying, yeah, rates are going to get easier. They're going to start reducing rates. And the European market has been saying the opposite. And I've kind of been leaning towards higher rates in the US anyways, that they're going to look past this. That like they had the crisis, they resolved the crisis, and now they go back to what they were doing before. Created a fake distrust in banking and financial systems, which needs a bit of time to be absorbed. I don't know about that. I think of it a little bit more as like a Pandora's box. Like, it really is kind of crazy to think about that bank runs haven't been a thing for like a century, basically. And, you know, the idea that, oh, I might need to take my money out of the bank is not something that has crossed people's minds in generations, right? And then all of the sudden, it's this huge thing, right? And when you look at it, it really is kind of like, well, how do you justify keeping your money at a regional bank? I don't see, because like, are you getting a better rate there or something? Like, how are they saving you money or giving you better service than the systemically important banks? I don't see it. You know what I mean? So it doesn't surprise me to see all of this money coming through, and I'm gonna bet that it's probably not done, right? So one could maybe say that it's been absorbed, quote unquote, but like the issue is what happens later on. Like if we have a full-on recession, especially if they have to continue raising rates and that leads to a recession, then those regional banks are really going to be in trouble, right? Okay, so there was a little bit of a turn. I don't know, 3.95 isn't very good. I bet you that if I bid there, though, that they won't take it. If they did take it. It's a little bit more aggressive than I anticipated. By the way, on this move, I guess a little bit of flattening today on the spread, but the last tick or two has been steeper. So Well, back down to 09 half. Let's reset it, because 09 half really is what seems to be the center of this zone. So they look pretty stuck there, but you never know. And a lot of these trends lately, it will seem to just come back down to the lows so quickly, right? So I think we got to be cautious about getting too comfortable. And also cautious about reading too much from any kind of moves that we have in here, because it does kind of look like it's stuck in the we're gonna range around here for a while sort of thing. Nick Chermeros quotes Yellen, "The financial stability risks posed by money market and open-end funds have not been sufficiently addressed." What's this? "A rapid finance world must ready for a slow-motion banking crisis," says the Wall Street Journal. Though the Fed and FDIC have stopped contagion from SVB for now, smaller banks could face pressure for years to come. See, kind of like what I was saying. It's just like, yeah, we avoided the original crisis, but like now there's Pandora's box has been opened, and we're not dealing with the larger issue here, which is it doesn't make sense to be in the regional banking business anymore. That 09 half acting a little bit different there on that last tick. This is a little bit more on the offer, and you know, they absorbed a little bit of it. That 08 half, hardly anything to pull that one. 08, hardly anything for that one. Is the 5-year taking new lows? No, not quite. They're equal to previous lows. But that was exactly what I was warning about, wasn't it? Yeah, I really think this is about European inflation data. Okay, well, that was a good take on the downside, but it's still, we're still kind of in a hole. And they were not like ready to just like go all the way on this. I think there was somebody selling, and they actually got a lot on their offer filled, because there was the 1800 at 08. It's that 5-year though kind of seems like we're flattening. Yeah, it definitely seems like we're flattening. kind of one of the things that I'm seeing in this location. They're having I mean, I'm not going to say they're having a hard time breaking these lows, but there is a bit of a liquidity hole above them, and they're not going for them yet. But if we were to break the lows and we were going to turn into a further trend, it's quite a bit below us before we start to get to any kind of like pivot levels that would be interesting, right? So right now we're still at yesterday's lows. So if we beat yesterday's lows, then the next major one would be the low on the day of the FOMC, which was 113.25 half, which is like way down here, right? There's actually some big liquidity down there. And what about the E-mini? E-mini seems to be turning a tad bit here. They're to a price though that they might start doing some funky stuff at those. So, oh wow, that came back real fast. Ouch. Well, that kind of sucks. I think that there was a point at which I almost got $10, but not quite. I think it was just a little bit short of that. But that they can move it that easily through this range is a little troubling. You can see also, by the way, while we've been through this range, the Japanese yen has kind of been slowly moving down. Silicon Valley Bank's collapse is a symptom of a broader breakdown in the financial machine powering the startup industry, says Bloomberg. I agree with that. I think the startup industry has been messed up for a while. So this coming from Credit Suisse. Central banks must reckon with financial stability risks while still in the process of fulfilling their price stability mandates. In the U.S., deposit flight concerns have translated into multiple bank failures and swift action from the official sector. Moves to shore up liquidity in smaller banks, say through offering higher deposit rates, could dramatically accelerate the expected slowdown in loan growth later this year. Note, small bank share of commercial lending has increased 10% over the last decade. Such a slowdown could support recession fears and the price flip to easing. The transmission of this lending dynamic to the real economy will take time to materialize, leaving markets highly sensitive to incoming data. Yes. This is what I was trying to say in my TikTok the other day. It feels like every economic point now is like a big, huge deal now. Okay, well, looking at the flow here, yeah, I'm gonna take the small loss on that one, because well, I did have some favorable price movement that I could have made a little bit from. It didn't break. It didn't look like they were really that interested in breaking down here, and the flow seems to be unsupportive at the moment of a move lower. So this might be like this could be a point where it flips around and turns back down, and I regret kind of taking that off. But I just don't like the trade overall anymore, because delta, the cumulative delta is just not doing what I want, right? This is a funny little thread. I mean, if you hate Bitcoin, then just like cover your ears. But Jacob Silverman tweets, "Who's given the Tether guys $9 billion in fiat cash money this month? In this bear market, on my daughter's wedding day, you come to me with $9 billion in fake casino chips with some guy named Justin? How dare you?" And Bitfinex responds to this: "When the Wall Street Journal reported that Tether is laundering money for criminals and terrorists, engaging in bank fraud and money laundering, helping Russian oligarchs evade sanctions, after all of that, legitimate institutionalized investors decided that it was time to send Tether more money." Yeah, that's exactly it. That's exactly it, man. So, I think we should reset our DOMs here again. And there's a further move up. So I'm definitely glad I got out when I did. I kind of thought about maybe trying to hold out a little bit, but no, that would have me at -10 now. Not well. I guess I am seeing a little bit of a reversal in the dollar, but I'm not sure if that's what's really driving this. And it does seem, like I said, the downside movement was not a whole lot of net change in volume. Net change in cumulative delta. This upside has been a little bit better, so that makes it really hard for me to justify being on the short side. I think I should have noticed that earlier, but two further ticks, and there's 358. Okay, so let's center it there. You're gonna start the Apex funding someday? Why someday? It's still going. It's still going. Dang. Yeah, it seems like, I thought I had a pretty okay trade, but this flow has to really question like the whole original thesis that I had coming in with this. So was that downside was European selling? Are they done now? Like, I don't know. By the time you do it, they're going to be in bankruptcy. I don't think about that, but notice any different flow yesterday and today, like end of month and end of quarter flow? So tomorrow you're probably going to see some really strong end of quarter flow. Yeah. I have seen lately, and it doesn't always play out this way, but as of late, so much of that flow has been on the close, right? Like in the equities, there's just like really massive imbalances on the close. A lot. Why tomorrow isn't T+2 settlement? No, it's the end of month flow that comes from stocks that's on like the last day of the month tends to be bigger. So yeah. But so that makes me think that maybe they're going to do that again, that they're going to save a lot of that flow to tomorrow. And the thing that I've noticed, well, really all this week, but especially yesterday, and now I'm starting to feel like it maybe a little bit today as well, is that the volatility in the treasury market in particular is incredibly constrained compared to what we were doing last week. Seeing the flow on Thursday and Friday of last week was like, really made me think that we were going to continue to see some drama this week, and then nothing has really happened, and it really seems like the market is waiting for PCE tomorrow, right? And even after we got the news, the GDP number, market kind of yawned at it. I do think that sell that we had was from the earlier European inflation numbers, rather. Sorry, I'm like stumbling all over my words here. But and now we've had this relatively strong push back up, kind of seemingly out of nowhere, perhaps as part of a reversion trade. Which brings me back to, I guess today we're really tight and constrained as well. So, question is, what do we do about it today? Well, I'm kind of leaning towards just staying out. Now, on the split side of that, the reduced treasury market volatility seems to have coincided with some pretty strong equity action. James says he's looking for a short. Oh, okay. I don't want to discourage people from saying things like that, but I'm not particularly interested in it. What the sorts of things that I believe will be the most useful to like other viewers is a piece of information that you think is going to lead to a certain amount of flow, right? So like this end of month thing that we've got going tomorrow, that's going to be a big deal. If there are some research analysts out there that might, I haven't read anything yet, but there are some research analysts out there that might give you a good idea of like how much of this needs to be sold and that needs to be bought and so on and so forth, right? And then that would be something that we could directly trade off of. In the E-mini, though, one of the things that you're definitely going to see is traders trying to close that overnight gap, right? There's always going to be somebody trying to trade that overnight gap. For a second there, I was like, did my feed cut out? There was like no movement. It looks like it's adjusted now, but you know, something interesting up here is that we have had this strong move up, but I'm not getting that sort of liquidity hole. One area starts to develop and distribute and so on and so forth. I think that could mean that we're still vulnerable to downside, especially if this move back up was some sort of a mean reversion trade or something like that. I wonder if we see as much. Yeah, that was really curious, wasn't it? But I mean, in the end, it wasn't the biggest deal. Like, let's see if I can go back and point out where it was. Yeah, it was right in here. Oops. Charts. It's like we were seeing things icing here. They moved a little bit lower. And then after that, it was like all up. Look at this, like cumulative delta down early in the day and then flat the rest of the day as the E-mini rallied. Yeah. So one thing that I recall Zero Hedge saying yesterday was that there was 0 data options guys out there trying to short the E-mini, and they just kind of got screwed and contributed to that upside. Yellen says that Trump and Mnuchin decimated the financial stability apparatus that had been built during the Obama administration and walked into an FSOC team that was less than 1/3 the size it was 5 years prior. Yep. You know, one of the things that has been the most disappointing to me over the last 8 years, let's say, is a lack of very strong action on the regulator side of things. Why did the S&P gap up like that? I don't know. The move that we're seeing in the E-mini right now, I wouldn't say is too significant. It does kind of look like they're chomping at the bit ahead of the open, though, doesn't it? There might be, I'm not seeing it, but there may be some like moves in individual stocks doing stuff at the moment, right? Anyways, so like the one that was driving me crazy for the longest time was like Gensler not really doing anything and seemingly in the back pocket of like the scammers in some instances, right? It was like they weren't putting money behind enforcement, and the people that were in charge weren't really taking very aggressive action. That has really bothered me. And you know, Donald Trump was not very good at that. I mean, he's just putting somebody he doesn't know anything about. He's just putting in who they tell him to, right? And then you'd think that when the Democrats got in charge that they would kind of change those things, and they didn't. So we're back to where I bailed out at. And this 10.5 is kind of a key market maker position in the 10-year that we've been dancing around a little bit. Oh, what's this? I missed a comment from Oliver. All those bounces later on had big sweeps of the order book by market sells into absorption and just bid back up pretty. Yeah. Well, you know, Oliver, this is one of the things that I always found incredibly frustrating about the equity market is that its propensity to move against the order flow in the futures, right? I mean, we have to realize that everything that we're trading is a derivative of some kind, but the equity market is like a much more a derivative than these other things because it's an index. So that introduces a lot of noise into it, but it can also introduce a lot of these situations where the order flow in the ES, it will directly contradict what is actually happening in the individual stocks, right? And I'd say that yesterday was a good example of that because it had a strong move up and it was not really accompanied by any change in cumulative delta. Well, they're sure coming back down here awfully fast, aren't they? Once again, though, I'm not really seeing the volume in the 10-year. I am in the 5 and maybe even in the 30 as well. Already showing some signs of counterflow, and we are right before the E-mini, so you often will see a little move before the E-mini and then it kind of slows down again, right? So that even though some of these prices seem okay, the timing of it isn't really very good. Yep, there you go. That just makes me want to not participate in the treasury market today, don't you? Doesn't that kind of rub you the wrong way? How quickly that changes. Okay, so here's the open. Seeing a little bit of selling here on the open, but it's being hard fought. Does seem like the yield curve wants to go flatter, though. So one of the concerns I'd be seeing here in the treasuries is like, if I was short the treasury, okay, but what if the E-mini starts getting hammered and the regional banks start getting hammered again, and you get the flight to safety kind of move again? Okay, so really tight range in the E-mini on the open, but so far the net delta on this first bar is slightly positive. Okay. There is some absorption there now against a move. Yeah, treasuries are doing this thing where it's like, okay, I saw something in the E-mini, and then it seemed like the treasuries reacted to it, and then immediately after that happened, the treasuries started going a different direction. I don't know who you're talking about. Is that a meme? Look that up. That is a meme. Are we talking about this guy? What the heck? I've never seen that before. I have to ask, don't I? Couldn't just leave it alone. Go up and look up something stupid. Is that an old one? You know what I've noticed as I've gotten older? I don't think that I've gotten out of the meme culture. I think that I'm still pretty on with the meme culture, but I just don't care. You know? It's like I'm so obsessed with the computer and reading the internet that I can't stop. But, you know, but I'm not like an expert in the meme culture by choice necessarily. You get what I mean? He was the cause of the financial crisis. Oh, man. Like, I can kind of see, so like this whole thing that's like when you're a kid, it's like, oh, these old people, they aren't with it, they aren't hip. That's not what it is. It's not like they're just so lame and don't understand what the kids are doing anymore, sort of a thing. It's that they've seen things change so many times that they just can't get themselves to care anymore. It's kind of like, oh, you want me to shift my entire wardrobe back to straight fit pants? Why? Who cares? Who cares? I'm not going to buy a new wardrobe every year. It was because of... And I feel like that a lot. Especially with the kids on TikTok. Like, the things that some people, man, there are some people that are just so obsessed with like displaying status, I guess you could say. And I think it's so dumb. Like, I at my core, you gotta run. Hey, thanks for stopping by. All reset had some good contributions. I think all these kids think that, like, if I do all these things and I'm the cool kid, then I'm gonna be famous on social media and have all these friends and I'm gonna be the famous influencer. And like, the reality is, you don't want to be that guy. You don't actually want to be that person. Those people hate themselves. It's not, it doesn't really do anything for you, in my opinion. I mean, what does something for you is knowing how to work with people and being a good team player and a good leader and being able to bring value to everybody around you. But this whole bit about like what I wear that day is going to be like huge contributor to my, like, if you're obsessed with that primarily, it's probably not going to lead to very much success for you. And I don't think the kids understand that. Indeed, the fun is in euro bonds. Not sure what's going on. Inflation figures down in euro, maybe due to a base effect. Core still high. Okay, let me send Alligator this article. I won't leave a comment. I just dropped the thread. Let's see here. So they got a couple more stories here. Let's read. In the least relevant data point on what will otherwise be a quiet day on the data front, moments ago, the BEA reported its third and final quarter 4 GDP estimate, and to be fair, this number will still be revised numerous times in the coming years, and it continued the trend of declines, having printed 2.9% in the first estimate in January, and then it dropped to 2.7% in the second estimate, and it is now down again to 2.6%. Exactly where the original quarter 4 GDP estimate was, primarily reflecting downward revisions to exports and consumer spending, and a masterclass in how you can buy 2 quarters of above average growth before converging with the original estimates. And for those keeping track, the most recent consensus estimate for quarter 4 GDP was 2.7, so technically we missed. According to the BEA, the fourth quarter compared to the third quarter increase in real GDP reflected increases in inventory investment, consumer spending, business investment, federal government spending, and state and local government spending that were partly offset by decreases in housing investment and exports. Imports, which are a subtraction in the calculation of GDP, decreased. The increase in private inventory investment was led by manufacturing, as well as mining, utilities, and construction industries. I'm just going to skip through a lot of this stuff and see what they're... And now we wait for the looming credit crunch, courtesy of the banking crisis, to send personal consumption negative. Putting it all together, today's report was downright stagflationary because while inflation remains hot and well above the Fed's 2% target, consumption continues to shrink. As Joe Lavorgna notes, real consumption was revised down 40 basis points to 1%. There isn't much momentum as a potential commercial bank credit crunch looms. The last quarter is the weakest since the quarter 1 2019. You say under 79 is where you would want to go short? I don't know. So again, looking here at the treasury market, it's been pivoting a lot. It started coming back down and making me think like, oh, do we go? Maybe they are going to go for the lows again, and it's bouncing back up. They haven't gotten above that high at 15, but so like we're kind of in the middle of a range in a market that seems increasingly constrained. So if we did have a breakout, a breakout would have to be really powerful, right? Because there's a really good chance that you could see breakouts either side and then have them just come right back in. Well, I was trying to think. There was a couple of things that when we felt like that the market was kind of shitty that we could do, but I can't really think of them at the moment. I could try sending a message. You know, let's do that. Wanted to see what the prices were on TT. Oh, that's weird. This on this webpage, the font, their U is higher than the other letters, and it looks really weird. I don't like that font. Hmm. Okay. So they've been dancing around a little bit here, but they seem to be settling at 12. And like I said, we're likely to have, to be a little bit constrained for a bit. I don't know. In this situation, so like normally it's like you get a meta order and then you wait 45 minutes, etc., right? In this situation, I'm not sure which one we would say was end of a meta order. I mean, one could argue that 7:30 was a time to start for again, and there was a little downside there. So let's just go off of that. Let's say 8:15. So like in 30 minutes. You know what else I can do is I have some things on here that I was like, I need to memorize these, so I can look those up. So here's what I don't understand about the CME month codes. All right, so you got like January, February, March, FGH, then April, May, June, JKMN, then here again, August, QUV, and then VXZ. Why did they pick the codes that they did? Why is January F, for instance? Why weren't the codes just the first letter of the month, for instance? And like July can be K or something like that, because there's 2 J's. Oh, there's 2 A's too, so August can be U or something. You don't understand. So what would be the best way for me to memorize this? Should I do note cards? I don't know if it makes sense to do it with note cards. So April is where it switches, right? J. April is J. That's gonna be hard to memorize. That's gonna be hard to memorize. It is stuck, man. It is so stuck. Michael J. Berry says, going back to the 1920s, there have been no buy the effing dip generation like you. Congratulations. Yeah, so like, even though like the professionals and everything have reduced their equity exposures and all of that sort of thing, the average household has not. They basically, they held and they've ate it. Petition on OpenAI's ChatGPT technology ignores the risks already unleashed. No, you know what? I think that we're in an overhype cycle with AI. I mean, ChatGPT was a significant step, but I almost wonder if ChatGPT is like in doing some sort of marketing campaign or something to like push it, because like you gotta realize that these algorithms are not generating original content, right? They're reframing other people's content. I think that's important to know. I mean, the people will make the argument that like, well, isn't that what we all do? Is we kind of we'll you know, we'll kind of we're always taking kind of works that we've seen previously and then adjusting them to the particular situation that we're doing, right? But it's literally like everything is coming from something on the internet, so it's not necessarily making like a new discovery, right? And that's the thing, is I feel like that they're kind of missing what AI actually does, or where AI actually has like serious benefits. Because what's happening is all of the people that slacked off in school, I don't know why I'm always thinking about these people, but I feel like there's this group of people that slacked off in school, and all they see is, oh, now I can just have this robot do all of my work for me, and you know, I'm going to make $1 million from the robot. And I don't think it works like that. I think that there are going to be some people that get lucky for sure, but I think that the vast majority of what you try from the robot is not going to work very well, because it's just going to be based on stuff that other people are already doing, right? Can't wait to write my own song and have Kanye sing it. Well, and that's another thing, is that so like, for instance, there's these AIs that you can put you can put a voice into it. Okay, so what was this? What was Quokui? You can go there and they have these different voices that you can use, or you can like speak into the microphone and it will learn your voice, and it doesn't take very much, and then so you can speak in anybody's voice. But like, what you get out is incredibly bland. Doesn't, you know, like, it's not very good per se. Meanwhile, AI allows us to go into certain processes that have always been kind of inefficient, and we're not able to figure out the dynamic of that system very well. And AI can help us sort out those systems and enable us to make incredible discoveries in the area of science and mathematics and finance, right? And everybody's interested in this chatbot. And when you go to, so for instance, Goldman Sachs, they had an article out 2 or 3 days ago saying that there was like 300 million jobs that ChatGPT would reduce or something like that. But if you go into how they're actually analyzing that, it's like really, really rough. They're really going in and saying, okay, here's this industry. How automatable do we think it actually is? Like, they're not actually going in and saying, okay, how practical, like what is the actual real use case for this technology in this industry, and how does it affect things, right? I don't think that they're actually doing that, because you can't just, sorry, but these AIs, you can't just put the AI on it and then whatever the AI spits out, you immediately send to people or something. Like, that would be really dumb, right? Because they say stupid stuff sometimes. They are just like dead wrong about things sometimes. And they always sound like a cheap salesman, like a cheap internet salesman. No, I don't think that it's going to, quote, replace as many jobs as people think. I think that it's going to change the nature of certain jobs, but I don't think that it's going to result in a net less jobs. If anything, it's just going to result in more jobs, because you're going to have all of the jobs of people maintaining the AIs. And then the other thing that I think people miss is that the real value is not the algorithm. The real value is the data that goes into the algorithm. Man, so I've been saying, yeah, I don't really like the action in the treasury. It seems a little tight. Look at the E-mini, man. The E-mini is really, really tight. Another thing is that I don't think that people realize the computational requirements here for all of this stuff. So I don't know about, I want to get into a tech stock. It's kind of like when's the right one and how to approach this, right? I don't know, because it's really uncertain right now, right? But let me show you two places, because I think that the place where you can see the most growth is in the computing. So here you've seen Intel has been on a run lately, right? That's like a 15-20% run. And then look at NVIDIA. NVIDIA is really going to be the star. Okay. Can you imagine if you had gotten NVIDIA back in October? Jeez. It's already double your money in a pretty awful market, frankly. Yeah. So can you buy NVIDIA at 272? Well, I think that overall probably could with the growth that they're going to see, but maybe the price is too much. Maybe there's going to be a decline. Maybe we really do have a recession, and the chip makers tend to get hit really hard during recessions, right? But for like a 10-year, 30-year play, NVIDIA, yeah, seems to me like that's, because I'm looking at it like I just want to have it translate what I say, or transcribe what I say and then respond to what I say was the kind of the initial use case that I was thinking about. And then it was like, maybe we can incorporate what the people in the stream are saying. Maybe we can incorporate what the market is doing and help the AI do everything, right? And just the transcription, it wasn't fast enough, and I would need a second machine. So then I'm looking at like building a second machine. You know, they sell like they sell these video cards just for doing this kind of processing. They're like $4,000 or $5,000 a pop. Yeah, so there's the ES breaking. Man, that looks like it's fading though. I tell you what, this is going to be one of those things where it's like, I'm super skeptical about any breakout, and I'm like, yeah, you want to fade the breakout, and then it actually does end up being like some massive uptrend. That's kind of how those sorts of things go, right? Massive trend develops right when we're convinced that nothing interesting is going to happen. Oh snap. Transgender shooter manifesto will be released publicly after the FBI has combed through it. That's probably going to be a real, yeah, that's going to be a real mess. I don't want to talk about it, but we should maybe be aware of that one. Well, there's some icebergs here between 12.5 and 13 in the 10-year. Cumulative delta, the 10-year is still net positive. But the other instruments are a little fuzzy. Oh my gosh, is it that boring? It's that boring, folks. Speculator Seth, the most boring live stream on the internet. And you know what the worst part of it is, guys, is that it's Thursday. Well, look at that. The E-mini did come all the way back in. I bet you there's lots of price action changes being that. Now the sellers are stepping in. And it's my deltas still look really iffy. Sometimes I'm like, should I put cumulative delta on this chart over here? But like, I think I need to do something cooler than that. I don't know. I am kind of wondering, why do I have this up instead of this? I used to have this up. And I don't remember what our reasoning was. I think it had something to do with like, it was too complicated for people or something. And we just wanted we wanted something that looked more familiar to them or something. Yeah, that had to have been it. I can't trade. The D suck at it. I tell you, when the volatility disappears, there's always these people. This is one of the ones that I've always thought is really funny. When the market gets really tight like this, there's just really not a whole lot of opportunity. And there are some people that think that like that's their market. Oh, it's mean reverting. I want to get into it and all of this sort of a thing. But like really what ends up happening is you just get chopped up. You just get chopped up. You want to be involved in the market when like there's money coming into the market. That's when there's the most opportunity for a retail trader. It's when new money is coming into the market. So this is one of those common mistakes that I see retail traders make so often. Okay, well they're going to try to break the downside. Look at that. That was pretty aggressive. Like the volume definitely has picked up here. That was pretty aggressive, but I'm still in the there's very little opportunity mode here. That could change. Especially if we got below the pivot. But as where some of you was looking were like what, 40 76, right? Let me burn the money I lost. Ledger, a startup making hardware wallets for crypto investors, has raised the bulk of its 100 million funding round as it benefits from turmoil elsewhere in the industry. Okay, so that's not the first like wallet I've ever heard of. And 100 million seems like a lot for what they're doing. And that seems like something that is going to blow up and we're going to laugh about it at some point in the future. I don't know how or what it is, but that sounds fishy to me. And at some point in the future, market here, the 30th of March, so that in a year from now when it goes bust and they're like, how could this happen? There was such obvious fraud and they still gave him 100 million. It would just be like, well, Great British Pound moves away from its 100-hour moving average, huh? Well, the British Pound has been moving today. It's been kind of on the upside. Oh, there's a little drop in the treasuries again. So now we're back in. Like, this is like our original trade, actually. Because our original trade was 3.58, wasn't it? No, it was 3.59. It was 3.59. Oh, you know, I didn't even notice that 115 is the VWAP. Whenever the market gets like this, I just can't shake off the suspicion that like something significant is going to happen. The E-mini is still just chilling at 40.79 there, though. And in that, the way that it tends to go, though, right, is like if a price seems significant, they just play around with it. Interesting. There's 2,000 lots at 11 and 2,000 lots at 12. Nope, and then a little shift. The lots at 12 pull. Huh. Both sides pulled. That was weird. So a little bit more volume coming through in the treasury. So there's that. Oh, and the E-mini did break a little bit lower now. So you get now like that 76, 75 area. Think they'll break lower. So let's double check over here. I want to come and look at KRX. Well, they opened up a little bit higher this morning, but are fading along with the index. And we are seeing a little bit of that flight to safety coming through in the treasury really quickly. Look at that. They traded like what? A basis point and a half there in a minute. By the way, most of that seemed like, oh no, I can't tell. My chart kind of suggests steepening, but can't really say where it's coming from. Well, this move down has coincided with the flight to the dollar, though. It looks like the traditional safe havens are playing their part here. Okay. You know, if this goes, it could get really interesting really quickly. You say Schwab is dumping? I'm skeptical about if that one's a really big deal. Let me come and look though. Okay, so they are towards the lower end of their range since the initial crisis. So, okay, we are getting some big orders over here. I don't know. I was looking at 575 and some big lots pushed it, I guess. Some backwash now. Do they? Okay, the big order at 14 is pulling. The E-mini looks like it's in the full-on. They're turning into full-on panic though, huh? I don't know. This is the point at which like you're like, oh man, maybe something really is happening, and then you go and you get in, and it like immediately starts reverting, right? I can see some retail traders starting to get involved here in the micro treasuries. President Biden doesn't plan to veto a GOP-sponsored resolution that would terminate the COVID emergency declared in 2022, sources tell NBC News. Okay, so I'm getting kind of significant ticks both ways now. So feeling a little tense. I guess when I was saying, you know, well, when would be the next meta order? And I said 8:15, right? And we are kind of getting a trade here. And it looks like maybe it's the upside, but we'll see. I'm still kind of leaning towards that the action's going to still be pretty crappy. So the years that go by, I learned trading is more like fishing. Yeah, in some respects. There is a lot of waiting, and the more patient you are, the better off you tend to be. Yeah, I don't really like that. Nobody's trading the 13.5 yet, though. The mini does appear to be recovering. Or at least they're getting a pullback of some sort. Okay. Forex live tweets, TweetDeck is down and Twitter is having problems. I am not having any such problems. Because I got that 6 seconds ago, so. Okay. I'm kind of watching this here and to see if a trade ever goes off at 3,575, and so far it's not happening. I'm wondering, on Discord, I get a lot of people trying to impersonate me and a lot of people trying to send spam and things like that. And I'm wondering if I should create like a gallows or something like that, like a place where when somebody gets banned, everybody can see it, so that the spammers don't come, you know. Turns out that, so I thought, oh man, I'm having so many problems and all this sorts of things with it. It turns out now that I've created my own script and everything, that I'm doing a lot better than most of other servers, and that I'm not the only person dealing with this. So it's kind of strange to me that Discord hasn't fixed these problems earlier, but okay, whatever. That would have been one of the first things that I would have worked on. You know. Well, they're not giving a 575, but they're not moving out of this range either. They've just kind of been stuck here. Still getting some people claiming that TweetDeck is down, but I'm not having any problems. Senate Majority Leader Schumer says Republicans must separate budget from the debt talks. Yeah, but then how will you have any debt talks? Like, what are you going to give them in return? Yeah, a little bit more volume coming through here. 14.5. It looks like a machine gun. It's been a while since I've seen one of those. This is only a few hundred contract sales, so. That 30-year, on the other hand, has not backed off. Let's reset that. So on this one, they're definitely acting like they've found another liquidity hole of sorts, but I'm not convinced that that's actually what it is. It's not like there's a lot of volume coming through, right? Downtick, although the 30-year not as much. I'm gonna reset it again. I want them lined up so I can see if there's something going on in the spreads. I can see like some flattening in the 30-year, right? That 30-year came up there on that a lot bigger than the others. Maybe I should on the Discord here. So if I come into the server settings and I go to the rules screening, I'm gonna edit. I'm going to edit and I'm going to say nobody will see your spam. Nobody will see your spam, so don't waste your time. That should be like the first thing that you see when you join, but it doesn't seem to dissuade them. Hmm. $13.5. So now finally, after like what? 15 minutes, you could sell it 3,575. Doesn't seem not as interesting anymore, is it? We do get the gasoline report here, right? Okay, so they did trade through 13, but then it's just like super quiet again. I guess the reason that today is so boring is because I didn't argue with anybody about price action today. That's the problem, folks. That's the problem. Oh, you just got back? Oh, I was wondering what happened to you, Jacob, actually. Well, this week hasn't been the best week. I mean, I took like two live trades, and one was a winner and one was a small loser. So I guess I'm up on the week. I shouldn't complain. But like the action has just been really slow and quiet, and it's really bizarre how quickly it has gone from a really, really volatile treasury market to a just absolutely dead treasury market. What's the sentiment on markets? Well, it seems I still see hints of fears out there. So for instance, they were saying we are having a little bit of a decline in the regional banking index today. Charles Schwab is getting hit pretty hard today, and they're at the lower end of their range, for instance. and we had a little bit of a break that kind of, for a moment, looked like it could really, really go. I don't know about you, if you took your profits, and Stefa, or any of the guys that were talking about the 4076 downside bit, but you know, for a moment it seemed like things were getting crazy, right? And then it just comes right back up into the range. So I see fears out there, but the market's not moving on it. It's like, oh, I am wrecked, started to gambling. This looks to me like a market that's waiting for something. Like maybe it's the PCE number tomorrow. Maybe it's the next set of jobs and inflation data, but Dow dragging equities, but tech is somewhat yes. That has been one of the most surprising things to me in March, was how strongly techs rallied. So I'm really frustrated on that one, because the stock, my tech stock that I had, was, got hammered pretty much through the whole decline, coming up into January. And then somebody announced a buyout. So their price has been pegged. So it's like they permanently locked in their losses or something. How effing dumb is that? So you should go double check that. The executives that agreed to that price for Sumo are idiots. You ended up locking in the worst price. Yep, it's still stuck at $11 basic, $12 basically. They sold it at 12. I mean, I guess it was a bit of a premium from where it was, but let's go and read the comments on Yahoo Finance. It's important to note that not all founders are better at starting companies than running them, and not all CEOs are better at running companies than founding them. Ultimately, the success of a company depends on a variety of factors, including the leadership team, market conditions, and the product or service being offered. The CEO's today's failure may have implications for his future IPOs, so it's worth remembering. Yeah. Yeah. I really can't sort out why they made the deal they did. Oh man, they popped right back up there so quick. Interesting. Still not making, okay, now they are. Wait, one more. One more, come on. No. Seems to me like they know that people take profits at 5, and that like if they were stuck around 3,575 for a while, that they have a hard time taking into 3,565. Now that's happening without the equities dropping here too, but there was a little bit of a bid in the Japanese yen. Not sure you could predict that one. I'm also not seeing deltas on it, so I think that the trend favors the upside, I guess, but it's kind of a, I haven't seen 565 go offer yet. Okay, now you can do it. Now you would for sure have gotten it. Tech helping for lower discount rates? Yeah, I mean, they just ended up being the flight to safety asset. It's really, I mean, lower rates really helps the tech for sure. But I think it was also like, oh, big companies and things like that. Because, you know, like, consumer staples and those other kind of stocks, those have still been doing well for a long time. So if you were looking for flight to safety from a new move, that wouldn't necessarily be the best place. At the same time, I mean, the thing is that when you go into a recession, that's when you want to buy the tech stocks, right? And you can get some really amazing tech buy. Like after 2008, I remember just looking at Apple and Microsoft and Google and just being flabbergasted by how low they were. You know, wish I had more money to invest back then. And I'm sure that if we have another recession, you get similar things with the chip makers. Like, you know, they could 10, 20 years from now, you might look back at Intel and be like, how were they that low? And be like, well, they weren't doing very well. They hadn't really built their graphics card stuff yet. You know? Ooh, oil spiking here. What's that? Yeah, you know what? This is getting like that zigzag sort of. I mean, it is a consistent trend higher, but really zigzaggy. So you'd want to be really careful about hitting into 15.5, right? I suppose one way to play this could be stop limit 16.5. Right. You think the industry standard will switch to AMD? No, I mean right now, it seems like that it's a little bit fuzzy, and things have been shifting towards AMD's favor. Like the AMD stock is doing a lot better than Intel stock, for instance, right? But I think that it's still like Intel CPUs still have a slight edge in performance and stuff like that, right? But what I think is going to happen is, so Intel introduced a video card, right? They did their first generation of video card, and they were like real video cards. They weren't just like those crappy ones that they used to have, right? Like real graphics processors. So I think that Intel is saying that, because of artificial intelligence and everything, the graphics processing space is like a really huge opportunity that we need to look for, right? So that's why I'm saying, like, right now, Intel interests me because it is down so much. And yeah, AMD is doing better right now, but they tend to go back and forth, and I think that it's going to be a real strong competition. And when that sort of a thing happens, it actually tends to be a boon for both stocks. So I think that AMD, Intel, and Nvidia probably all do really well in the next decade. Although with AMD and Nvidia, the price that you get might matter, right? the price on the stock, because they are pretty high. We're getting into a market here where like every little tick seems to matter. That's really, that can really draw me in and get me really hyper focused on the market, but that's usually not good action to trade, right? Am I calling an Intel bottom? Oh man, I don't know, Jacob. I kind of feel like we're already too late on that one, because their stock got upgraded last week, and they're already up like 10-20% from their lows. Will there be a reset? Like, here's the thing that I wonder is, like, will there be a recession second half of this year? Is there going to be another really strong decline in the equity indexes? And if so, how much does that affect chip makers? Right? I don't know, man. I have a really hard time sitting here and thinking about, like, if we were to go the whole next year and then everything ended up being just fine. Like, that would be like, what? Because it kind of seems to me like there still needs to be a decline. I don't know why I feel that way. But it almost feels like, how could they possibly do that without there being a decline first? You think we'll see a revisit? I was quite impressed with how quickly it recovered, though, man. The ES did. I mean, I kind of expected that they would do some sketchy stuff. The funny thing was the way, I mean, it did the exact same thing in the treasury, didn't it? It was like they go for the high, like they're gonna break out, and then when it doesn't happen, it just immediately flips back the other way really hard. I don't know. So the thing is number one, we weren't talking about like a specific entry and all of these sorts of things, right? But could have just as easily have done the same thing the other direction, right? I'm sorry, man, but like trying to convince me that you have some super strong predictive edge in is not going to work in such a shitty market, right? Is going to be so difficult to convince me that you really have something in a market that's mostly random, right? It went down, it came back up. Nah, could have gone the other way. You would have been short. You would have gotten slaughtered, right? It's just market makers just messing around. And a lot of people think that they can predict how that action is going to turn out and go and everything, but it really does just tend to be random. And whatever it is that you do, they just kind of adjust to screw you over maximally. Yeah, see, you're saying all the wrong things, man. Saying all the wrong things. They get more viewers that way. You think that they're looking for viewers? I don't know about that. Oh yeah, we did hit 10K today, didn't we? Wait, let me go and check that. I've kind of been surprised at how quickly we got to 10,000, from 9,000 to 10,000. It was a little bit later than I thought, though. I thought that I was going to be at 10,000 before the end of 2022. But, you know, the video that I put out on the Ninja Trader, that really helped the market. I really need to get a new video. Isn't that a benchmark with YouTube's algorithm? Won't it push your videos more now? I don't know. Maybe. Could. It sure seems to me that YouTube channels that like really take off, you know, that they were to 10,000 subscribers first. So I'll go and look at people's stuff all the time and see that. Should we do some research? Let's do some market research on that here in the last 5 to 10 minutes. No. I want to make fun of James first. Okay. I really don't care how much somebody claims to have made from a particular strategy. Past performance is not indicative of future results. And I've found that like focusing on those things and paying attention to those things just leads you to getting swindled over and over and over again. If there is a real market behavior, you should be able to empirically prove it using the market data, right? I cannot duplicate your trading results. I can't go back in time and like do the trades that you did at that, and all that sort of thing, right? So like you might have gotten lucky, you might have been trading differently from how you actually claim. There's, I might not be able to actually take the same trades as you. Like there's all of these different reasons, right? But if I have like an algorithm and I can run it on the last 5 years worth of data, then I have something that I can investigate for myself. Then it becomes empirical, right? So bragging about your performance is like, if you're trying to convince me of something, is the worst thing that you can do on this stream, right? Is brag about your performance, because then all I'm going to do is going to be like, okay, send me 5 years of your broker statement. And if you don't have 5 years yet, then shut up, because you might just be lucky, right? So unless you have something that I can back test, I'm really not interested. Right. And then this is the part where they say, well, I don't want to give it out. And then I'm like, well, then shut up. Because I'm not here to follow somebody else. That's not trading. Trading is not following somebody else. Okay. For some reason, all these retail traders, they have it in their head that trading is like retail trading, technical analysis trading is basically following other people. Oh, you see other people do this thing and then you take it. That's what you end up doing. It doesn't work, guys. It doesn't work, because by the time you see it, they're already in, the flow's already through, right? You need to predict the flows. You need to have something that predicts it, right? How am I going to predict it if I have to rely on you to tell me first? Can't. That's why you need empirical evidence, right? So you're new, but that's the way that we go. Okay, so let's look at social blade here, shall we? So I don't know if it will do. Let's look up ICT since he's so popular these days. Yeah, okay. Oh, that's weird. His subscriber numbers are all messed up. He's such a joke. I agree. I like if you know the history behind him, you would just laugh that he's become like, how did he get 547k subscribers? But this is saying, wait, is this subscribers, like those are added? That's the amount added. That's monthly gained. No, I think I want. Oh, there's got to be something somewhere. I wanted to see where he was at before he took off. Here we go. Oh, he was already at 200,000 a year ago? I think the first time that I had heard of him, he was at like 20,000. Oh, here you go. Oh, that's just more of the data doesn't go far back enough. So bad example. Some of them we probably can't do anymore. Humboldt Trader, she did really well. Oh man, she's almost to 1 million subscribers. Oh man, I've gotten a lot of video views off of her. I should go to her channel. Actually, let's do that right now. You know what's one of the things that I find is funny is I think TikTok does this, and I think YouTube might do this to some extent too, is it will look at what video channels you watch and it will say, oh, that must mean that you're in this niche because you're watching other creators in that niche too. And I just hate all of the other creators in the niche. I don't want to watch them because whatever they say, it's always stuff that I already know, right? So with her, it's kind of a similar sort of thing. It's like I've never heard her say anything that's objectively bad, other than that she does seem to believe in technical analysis. But it's just like not interesting content to me. But I should keep track of her channel because I've gotten so many referrals from her. Right? The video that she keeps posting is how much money do they make? Blah, 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 blah. Okay, but what we want to do is we want to say like, okay. It's as always the clickbaitiest titles. I went from losing to winning. Okay, show me 5 years of your returns then. You seem like one of those fake gurus. Everybody seems like that to me. But wow, lost 47,000 in a day. That's awful. Yeah, I remember she got to about 12K and then she got a big bump and she attributed it to the algo. Yeah, well, you know what happened. So here's my conspiracy theory, Trading Bunny. I think that the stock market craze after the pandemic was engineered. I really honestly do. So algorithms were kind of already picking up on this stuff anyways, because there was the couple of really big trades that happened on Wall Street Bets. So Wall Street Bets was kind of the origin. And there was like the infinite money glitch, and that's what got people interested in it, right? And before that, it seemed like the YouTube algorithm did not correctly categorize the finance category, even though there was creators and stuff like that. But it just didn't seem like it picked up on it very well, right? And then all of a sudden, all at once, after in that March, right? Like I started getting tons of viewers to my channel, and it was like the algorithm just like instantly picked up on it, right? And there was certain people that, you know, were doing the stuff that the YouTube algorithm likes, like with their thumbnails especially, that really took off, right? And so I think that somebody went in and said, oh yeah, finance should be a thing. We want people to be buying stocks and everything now. And they pushed it. They pushed it because it was like, I just don't think it's a random that like all millennials suddenly became interested in the stock market all at once. You know what I mean? And yes, her and Kevin seemed to have benefited, but in terms of like day trading specifically, she benefited the most without question. Yeah, of course it can't be a pump and dump without retail. Yeah. So I'm telling you, somebody at Google said, oh, this has got to be a thing now. And the other piece of supporting evidence that I would give is that about halfway through that, it's like the algorithm shift, and then all of a sudden it didn't send people anymore. Like it doesn't really send very many people to the live stream, for instance, anymore. There was a time period where we would get 50 viewers just even when the show was terrible, you know? Because YouTube was pushing live streaming and it was pushing finance. Yeah, Wall Street Bets really was ground zero. So I'm looking like in the past month, what is a video she's got that's popping off? Chat GPT made me 100,000. That stuff pisses me off so much because you know that those aren't going to work in the long run. Maybe I should make a video that is like why Chat GPT sucks or something. Would that cause enough like would that cause enough drama? Dude, actually maybe I will. Okay, I'm gonna open this link in a new tab and come back later. Come back later. Oh, you know who we need to look at? We need to look at Matt Trades by Matt. And there we go. Okay, and will it show it to me? Yeah, you see, it was like he was here in the like, oh, I don't know how many it was overall. Really hate that it doesn't show me overall. Yeah. So like for a long time he was at 20K and then he got a bump. And then he started doing that's weird that there was a big drop in video views. But then at some point there was like he did video collaborations with some other people and stuff, and then it really took off. Yes, I was considering what traders are looking for when they start in the Holy Grail. Does seem to be some kind of cause and effect. Traders want the formula that works, and that's why price action doesn't work for the majority, because it's discretionary and not causality. Yeah. I actually kind of have some evidence to suggest that post-pandemic that the price action setup suddenly started to work better. But that could be because of the influx of people, right? Anyways, I'm super happy to be at 10K, but I'm constantly looking at, like, I have videos to make, but sometimes I'm kind of like, where should I be taking, because I gotta feel like I'm going somewhere, you know. And right now I don't know if I have. That's why empirical data seems to be the way. Yeah, I'm trying to think, like, when I was going, because I definitely did technical analysis at the first two, and I don't know why anymore. I think that that's just what the internet told me, that it was like, if you're going to day trade, you should be doing technical trading or something like that. And I was interested in day trading because it gave me so much, like, it, you know, it grabbed my attention because I'm ADHD. But, you know, I wish I could go back. Empirical data. So I have a video about proven market behaviors here on the channel. You can go and you can watch that. And that is kind of a good gateway into the empirical data. Okay, but it's time for me to go. So let's make a title about the most boring trading day ever. Nah, I'm just gonna say it was GDP. Yeah, okay, GDP. All right, guys, I will catch you tomorrow. Hopefully tomorrow is a little bit more interesting, or maybe next week. In the meantime, stay excellent, team.